Hey, how's it going, guys? Welcome back to mentfx, and in this video I want to talk a little bit about Wyckoff and what a lot of people get wrong about Wyckoff when it comes to looking at the markets. So the one thing that a lot of you get wrong when it comes to actually using Wyckoff to look for entries is that you're trying to spot Wyckoff for the purpose of understanding where the price wants to go and trying to use that to figure out how to get in. Instead of this, understand that the market is always going to be delivered to you in a form of Wyckoff. This is the snowflake rule, as known as coined by me. And the idea of the snowflake rule is that Wyckoff will occur absolutely everywhere. Almost any consolidation in price is an example of Wyckoff. For instance, this is Wyckoff, this is Wyckoff, this is Wyckoff, right? Reaccumulation, accumulation into a redistribution, redistribution on a lower time frame, accumulation, accumulation into a redistribution or overall redistribution, accumulation, distribution that sells down into a reaccumulation, which also makes a fractal accumulation, okay? Distribution, which makes a larger reaccumulation, which also has a fractal accumulation in here, okay? Distribution, distribution that may become a fractal reaccumulation. Now, if you're just trading Wyckoff, this will scare the living shit out of you and will also pretty much put you on the wrong side of the market a lot of the time. What people don't understand about Wyckoff, and the step that you need to ensure that you take, is to understand that it should be used as a last resort confluence or as a confirmation entry criteria for your already preset bias. So I've spoken about bias and storytelling a lot on this channel, and the idea behind it is that before even going into trying to spot Wyckoff or spot liquidations, you need to have a story or bias that you have about price before getting into it. So again, we're using the Australian dollar and the yen to show the example. And again, there's no specific reason I'm looking at it. I like it because AJ is my nickname, so I'm gonna just use it. Doesn't really matter. But the idea is, as the daily began to break higher, we're expecting it to continue to break higher. Now that is all rooted in nothing more than actual structure and institutionally how lows are being held and which lows are more likely than not being protected if we are to continue delivering higher prices. Now notice how I'm not using Wyckoff to see that, okay? Instead, you want to formulate a bias about what Wyckoff is, what you're supposed to expect, and then you want to confirm that expectation with the transfer of weak hands to strong hands. So if you don't know what I'm talking about right now, please go ahead and go to my channel. I don't know, maybe you can search it, weak hands to strong hands, mentfx. If you go and search this and watch this right here, what you'll understand is that the weak hand to strong hands is the actual confirmation of Wyckoff and should only be utilized once you already have a preset notion or confirmation in mind about price. So what I mean by that is you should never be looking for Wyckoff as one single confirmation. When you are, like I said, all of these areas are going to function as Wyckoff. Instead, what you should have is you should basically have a few zones, right? So maybe like a supply zone here, a demand zone here, right? Right, so something maybe happened like this. So maybe you have a break higher, comes into here, you have a big break down, right? And price is here or so. So let's make the supply zone this, right? Or you can use the further refinement of taking this as the 50%, looking at this as your supply zone, right? Similarly, you have a demand zone shown right here, or you could, again, because you might be on a higher time frame, take the 50% of this and just recognize that this is the zone that maybe wants to get filled because potentially there's a little bit of imbalance here, right? And maybe if you took the fixed range of the volume profile from here to there, you've also noticed that there are very low volumes here and there could be some liquidity in here, okay? So what happens is you already have an anticipation in this market, right? And that anticipation, let's make it, no, not that color. I don't like that color. Let's make it blue. Let's say your anticipation in this market already, without looking at any Wyckoff whatsoever, is to see price tap into the demand zone and then continue higher. Now, when it continues higher, you expect it to either tap into the supply zone and go significantly lower, right? Or you expect it to continue on its prerogative to come and continue to take out liquidity on the top side. With this anticipation in mind, notice how we still have not drawn in any Wyckoff. Now, what does that mean? That means that the one time you want to actually start to use Wyckoff is when you're in these areas, because that's where the weak hand transfer to the strong hands is going to be shown to you. And the reason you can be flexible with smart money concepts and still change your bias a few times is because if you do not see this transfer of liquidity from the weak, the weak-minded, the less willed, the ones that are kind of getting emotionally involved early, the FOMO'd people, if you're not seeing those orders be transferred into strong money, then you know more often than not that this will actually now act as an area of liquidity. So what I mean by that is when price gets to this specific area right here, okay, there are pretty much two things that can happen, right? There's one, two. There's two things that can happen. One, you have a real move down into price that stops prematurely to this demand zone. So let's draw out this demand zone right here. Let's assume that this is that demand zone, right? That's that demand zone right here. Same thing. And as price approaches it with this down move right here, so let's make that black again. Here we go. So please follow or take notes, whatever it is. As price approaches it, it stops. Big move away. What is that to you? That is already the indication that there is some kind of abruptness in price that is allowing retail or weak-minded individuals to believe something that isn't there and believe to get involved on those moves before anything is to happen. Let's say it comes down and makes an equal low. What is that to us? To us, that is confirmation that we are beginning to build a sense and a story of liquidity that needs to be cleared before we come and actually move from this zone. Okay, price comes down again, liquidates it. What do we now know? Now we've most likely had a selling climax, an AR, an ST, and potentially now we're having an ST and B. Price moves up, maybe comes in one more time into a deep area of that demand zone. Okay, fantastic. We're still not involved. Price breaks intermediary highs. Fantastic. We begin to see a fractalized build of liquidity and move through. At that point, we're on a lower time frame confirming this and looking to take this sign of strength into a buy to complete this sign of strength that may now come back one more time for a test, right? That might come even under this, but maybe even comes and holds it at this demand level before moving higher. And that is one opportunity that will then take us where? To the liquidity, to the liquidity that we have mapped out previously right here, okay? So that's going to be one of the opportunities that we can expect, the weak hand transfer into the strong hand. And again, this is already rooted in the idea that we're expecting bullishness from here. And with that rooted idea and that foundation, seeing this occur is what allows us to confirm that we want to actually see higher prices out the breaks of structure, and potentially higher breaks of structure that gives us into good tests, right? Then takes us higher. Now, the other opportunity or the other option for this specific area, right, is that price begins to approach it. Let me make this a little higher so you guys can see it. There we go. So again, let's draw out this demand zone right here. So this is option 1 and this is option 2. Again, we're in that red area. Again, this is all that red area right here, right? That's all that red area. That's what's occurring in it. And again, as price begins to drop down into this area, we see something like this. We see a tap in, abruptness. Okay? We see a tap in, abruptness. What is this to you now? Or even, let's say it kind of swings higher like that and breaks structure. To us now, this is not the transfer of weak to strong hands. Yes, there is a clear of liquidity, but have we undergone movement that signifies that there are orders that are being trapped out, taken out, slow orders that are being mitigated out, taken out, breaks of structure, showing us that there's fractalized movement of orders from weak to strong, weak to strong, weak to strong, over and over again? No, there isn't. There's just this. Now, if this happens, okay, and price begins to come down and then begins to form something like this and break structure, now this again is becoming valid for buys. However, right, this becomes valid for buys. However, if that isn't to occur and instead we see something that taps in, comes up, taps in, comes up, and just kind of comes towards it, maybe does something like this. What is this? This is a buildup of liquidity to make people go long early, even smart money that are confused by potentially this break right here. Smart money that gets confused, thinking that this is actually, you know, Wyckoff or a fractal Wyckoff or wants to take it higher, that then does what? Gets cleared. right? And the third thing that can actually happen, if we are to consider all three possibilities in this overall market structure or this market move, the third possibility is, again, we have this demand zone, but this time, and again, this is what happens in that red area right there, but this time, you know, it just kind of, and there's no reason to assume buys from there. So what happens is FOMO'd people, or even FOMO'd smart money, will buy in here, okay? Or even might buy off of this mini push like that. They might buy in this push and get completely taken out because they want to get in on a move, especially if they think this is a real low that's going to now finally come and take out a liquidity high, right? That's going to be a lot of RR. That's like 1 to 40, right? And it could happen, but the probabilities are very against you because you're not seeing this transfer, right? So that's the importance of understanding this transfer of liquidity from weak to strong hands. And if you wait for this transform, then you understand that Wyckoff should not be used as a form to predict where price is going, but should be used as a confluence to build upon your preset bias about how price should continue to respect or not respect certain areas. So if, for instance, this variety 3 happened right here, right, instead of any of these, then you would expect now for the new supply zones that are being formed, the new supply zones that are being formed off of the breaks that might have happened, right? So something like this. The new supply zones being formed off those areas are now going to be the areas where you want to expect price to actually come up, right? And then if you begin to see the weak hand transfer, then you know what to expect. If you begin to see just breaks through, you know where to look for buys to come into potential weak hand transfers into sells. And this is how you can predict and anticipate and use Wyckoff as a confirmation tool rather than a bias tool to tell you where price may head and how to get involved on that price before it heads to given areas of liquidity. Now, when you wait for something like this to occur, it also means that you might be left on the sidelines sometimes. There are going to be times where price does this, right? Breaks higher and just kind of marks up. Now, if you're in the mentorship, you know the triple M strategy that allows you to actually enter in on a movement like this and still take yourself to the top. And if you want to learn that, make sure you join the mentorship at launchpass.com/mentfx/mentfx. Otherwise, you can go and refine your own demand zone 2.0s that you can take to the top side. But there are going to be times where a markup occurs and you aren't able to sit in on it. But when you take a step back and recognize that Wyckoff occurs in every single area of the market, every single day across every single time frame, right? On the 1 hour, you saw how many I shown here. If you go to a 5 minute or even a 1 minute, imagine how many Wyckoffs occurred today, right? There's again a distribution here. I'm just gonna circle them because there's so many. Distribution, fractal accumulation, fractal reaccumulation that becomes a redistribution, distribution, fractal accumulation, mini accumulation becoming a fractal distribution, accumulation into a distribution, test of a distribution with a distribution in it, fractal redistribution in that distribution's test, fractal reaccumulation becoming a larger distribution, maybe a nice accumulation here, just a distribution into a cell, accumulation, fractal reaccumulation, distribution into a fractal redistribution into completion downwards, right? There is a ton of opportunities and ways that Wyckoff can get you into trades. If you just trade Wyckoff, it will fuck with you. If you have zones that you have notated for where you want Wyckoff to occur, and you see those fractalized areas of price delivering to you that transfer of liquidity from weak-handed market participants into strong-handed market participants, then you know how you want to be involved on that and be involved in that markdown. Now, again, this markdown doesn't have to be huge and dynamic. It could just be a markdown that comes to meet some liquidity, right? And then continues to fractally reaccumulate higher. This is how you anticipate price, especially when you have a bias preset. And when you mark that together with top-down analysis and top-down expectations on behalf of where orders are, where orders can be, and what is looking to be mitigated or looking to be taken out liquidity-wise, then you create a system for yourself that you can trust, profit from, and properly execute. So thank you so much for watching, guys. I hope that made some sense about how you can use Wyckoff as a confirmation and not as an actual tool to determine where price is heading, and how you should build a story, a bias, in anticipation of what price can do and use Wyckoff to confirm that instead of randomly FOMOing to trades. Even though you can FOMO into this trade right here off of a refined zone and get actually very good RR, more times than not, your refined zones are just going to be shot through, taken out, not mitigated at all, and give you no potential opportunity to get involved. On the other hand, if you give yourself the chance to see the weak hands in the market, the weekends in the market be taken out by the strong hands and see real structural shifts, then again, you can use the same entry criteria of last down moves for the up moves, or taking the last bulk of the orders and use that to get involved, right? And take that to the top side. And if you're not able to do that, you can use the fractal reaccumulations that happen on smaller time frame biases, because in those same areas, you're going to have, again, fractal reaccumulations. And this is an example of where, again, you have weekends taken out, breaks the structure. And again, this is valid. There's no retest in this case of any of the demand zones, which is going to happen sometimes. That is part of the game. Part of the game is missing some setups. Again, if you're part of the mentorship, I'm sure a lot of you can see the triple M's and ways to get involved on this markup, because there's a ton of ways to get involved on it, and it's beautiful. Otherwise, others of you that do not can use normal breaks of structure, normal confirmations of certain areas, normal confirmations using the 50% of those areas, or confirming them using weak hand transfer to strong hand transfer and getting involved on the moves up. Again, confirming structural moves and anticipatory supply and demand zones that are unmitigated with the confirmations delivered to you by Wyckoff, which show you the weak hand transfer to strong hands. Right? So again, if you haven't seen this video, please check it out. It'll help you a lot in understanding this idea. Otherwise, understand that Wyckoff should be used as a confirmation tool rather than the way it has been taught by many, and the way that many people think they should be using it. So thank you so much for watching, guys. I hope this made some sense. And if you took anything out of it, please leave a comment in the description, leave a like, whatever it is. Subscribe, doesn't really matter. I hope a lot of you are learning. Hopefully you took some notes on this, recognizing that there are multiple ways that price can be delivered to a zone. And the reason as smart money, we are never 100% sure of an area and can't just say, buy that area, is because we want to see a certain number of things to occur at that area that give us the belief and that put us into the process of anticipating new liquidity runs on given highs or lows based on the bias that you're in, bullish or bias. Thank you so much, guys, and I'll see you in the next video.